Good evening everyone and welcome to today's video on the pound. The pound is in a limbo as markets wait for a trigger. With fiscal concerns stabilizing, market attention has shifted decisively towards incoming UK economic data. Investors are closely tracking GDP figures due next week, followed by labor market data, both of which are expected to play a pivotal role in shaping expectations for the Bank of England's policy path. These releases will be critical in determining whether the BOE maintains its cautious stance or moves further towards monetary easing amid slowing growth dynamics. Now coming to the consumer spending and consumer spending signaling ongoing softness. Despite improved fiscal optics, indicators of domestic demand remain fragile in UK. Barclays debit and credit card data show that the UK consumer spending fell by 1.7% year-on-year in December 2025, the sharpest contraction since February 2021. Spending on essential items declined for the 8th consecutive month, underscoring persistent pressure on household finances as inflation concerns and expectations on higher taxes continue to weigh on the sentiment. Now coming to the UK's growth momentum, which is losing steam. Adding to the growth concerns, UK's GDP momentum has been steadily slowing, with annual growth easing from 1.9% to 1.3%, highlighting a gradual loss of economic traction and reinforcing expectations that policy support will be needed to stabilize activity in the coming quarters. Now let's discuss the political landscape. A latent risk for sterling is the political uncertainty that remains in a background risk, with markets flagging the potential for leadership challenges following local elections later this year. While the Prime Minister has reiterated his commitment to policy continuity, markets remain sensitive to any developments that could reignite fiscal concerns. Against this backdrop, sterling is expected to remain range-bound and highly data-dependent, with limited upside until clearer signs of economic stabilization and consumer recovery emerge. Now coming to the technical outlook, GBP USD pair has been trading within a downward sloping channel over the medium term, characterized by a sequence of lower highs and lower lows, reinforcing the broader corrective structure. However, following a strong rebound from the mid-November lows, the pair staged a notable recovery toward the upper half of the channel, indicating improving short-term momentum within a still fragile trend. In recent sessions though, price actions show signs of cooling off, with momentum indicators confirming the loss of upside pace. The RSI has started to decline and from higher levels, suggesting that bullish momentum is fading out in the GBP USD pair after the recent run-up. This moderation in momentum points to a phase of consolidation or shallow pullback rather than immediate trend continuation. Now concluding the video, as some action points for GBP exporters should look to hedge above 121.50 levels and gradually increase on uptick towards 122 or above, while importers should wait for a dip towards 119.30 levels to restart hedging. That's all for this quick video on the GBP USD pair. Thank you for watching.